How long does the IRS have to audit you, and how long should you keep your tax documents? My name is Merrill Taylor. I am a CPA. I specialize in working with business owners, helping them save money on taxes. We've helped them save anywhere from $10,000 per year up to hundreds of thousands of dollars per year using niche tax strategies. So this is a question that we get often, is people want to know, how long can the IRS come and audit their return, and how long should they keep their tax documents as a result of that? So generally speaking, the IRS has 3 years from the time you file a return for them to audit it. So that's the time to file it. So let's say that you file your return on time. Let's say that you're filing your 2024 tax return, which is due April 15th of 2025. Let's say that you file it, let's say you file it early. Let's say you file it in March 15th of 2025. The IRS, in that case, has 3 years from the deadline of the return, which would be April 15th. So we're 2025, so if you count 3 years, 2026, 2027, 2028. So the IRS has until April 15th of 2028 to audit your 2024 tax return that you'll file in 2025. And so generally speaking, we would say, let's say now you can extend your return, right? So let's say that you file an extension, which gives you until October 15th to file that return. Well, in the case of an extension, the IRS has 3 years from the date that you actually file that return. So let's say that you file an extension through October 15th, but you file your return, let's say July 20th. Of 2025. Well, in that case, the IRS has until July 20th of 2028 to audit your return. They don't have until October 15th of 2028. So filing an extension doesn't automatically extend the time that the IRS has to audit your return. It's all based on when you file. So even if you filed an extension and still filed your return by April 15th, the IRS only has 3 years from April 15th to audit your tax return. So how long, so that's the general case, is they've got 3 years. Now there are some exceptions to this 3-year rule. And one of those exceptions is a substantial understatement of income. So if you've understated your income by 25%, your gross income, so let's say that your income for the year was $100,000 and you reported $70,000 of it. So you've underreported your income by 30%. Well, that means you've underreported your income by more than 25%. So that opens the statute of limitations to 6 years. So the IRS now has 6 years to audit your return rather than 3. Now, if you've done some kind of a fraud on your return, or you haven't filed a return, the IRS has an unlimited amount of time. There is no statute on that. So if you've done some fraudulent activity or something, and the IRS can prove it, the IRS can go back 10 or 20 or 30 years, however long. I've never seen that happen in practice. I've usually just seen the IRS stick to the 3-year rule. I've never even seen them go to 6 years for substantial understatement. It's always been the 3-year. But they do have that ability to go back further. And then if you've never filed a return, the IRS can go back at any time, because the statute only starts when you filed a return. So if you've never filed, the IRS can come anytime and audit you for that. Now, how long should you keep tax documents? Now, some people would say 3 years, because that's the statute for the IRS to audit you. There's this statute of 6 years if the IRS can prove that you substantially understated your income. A general rule is to save documents for 7 years. That might sound long, but by the end of 7 years, certainly everything would have been closed. You can get rid of documents at that time. Nowadays everything's kind of electronic. So for me, I actually have my documents going back. I have all my tax returns since I've ever been filed, because it just rests on a Google Drive that I have, right? So everything's just saved and stored there, and I have all of my information going back as far as I want. Now, if you have ongoing investments. So let's say, like I bought my house 20 years ago, or 18 years ago. So I bought my house 18 years ago. I am going to want to keep all the records of me buying my house and all the improvements and everything I've done to that house until the time I've sold that house, and then 7 years beyond that. Because when I sell my house, I may have to report that on my tax return, which means I'm going to have all this backup documentation. Same thing goes for stocks. Let's say that you own stocks that you've had for many, many years. When you go and sell those stocks, the IRS could say, hey, we want proof of your basis. So you may have to go back 10 or 20 or 30 or 40 years to get the information for that stock information, for that stock basis. So that's the rule, that if you've got something that's kind of open and going on, that you want to keep information for that until you file the tax return, and then even 7 years beyond that when the statute is well closed for that tax return. So those are the rules when the IRS can come and audit you, how long they have to audit you, and how long generally you should keep your tax information. If you want to get more tax updates, then go to taxtutor.com and subscribe to our weekly newsletter.